What's up, guys? What's going on? Happy Tuesday. I got a lot of earnings today. Let's check them out. Let me see. So we got Microsoft that just came out. Let me pull up my screen. We also got Texas Instrument that just came out as well. What's up? On Doughboy, Patron, how you guys doing? So Texas Instrument just reported. Damn, it's moving too fast. Earnings per share is $2.07 as opposed to $2.05. Sales is 4.64 as opposed to 4.66. Stock is down 3.5% after hours. Compared to last year, this was a 46% increase in earnings per share and 21% increase in sales. So stock has also ran up a lot compared to last year. It was trading around $148. Now it was, now it's like 190s. So they say for next quarter, guidance is a little bit wary. 1.83 to 2.07 as opposed to 1.93 estimate. So they said either we're gonna beat or we're gonna flop for the next quarter. So it's a little bit iffy there, man. I'm guessing probably supply chain and labor shortage issues. Guidance is pretty similar. Microsoft also reported as well. What's up, Chester? Sean, how you guys doing? Microsoft beat as usual, right? It's always been a great stock, really good for iron condors if that's something you play. Earnings per share is 2.27 as opposed to 2.07, so that's a beat on the EPS. Sales is 45.3 as opposed to 43.97. That's a great beat on the sales side as well. Nothing new. I mean, it's not like a crazy beat, but it's a pretty good beat. I don't have the data for last year, so I'm not sure how they compare to that yet. I'll look a little bit more further into it, but they definitely went up a lot. They're up like 50% compared to last year in terms of stock price. So they said compared to the previous year, revenue is up 22%, operating income is up 27%, and then EPS is probably up somewhere like around 50%, man. A lot of things are doing good for them, but obviously the stock price has also gone up like 50%, right? Despite all the good revenues and things like that, because last year was trading somewhere around $213 to $200, and right now it's $311. So definitely a pretty good increase over there. Let's check out some of the other stuff going on. Hawaiian Airline, no real movement there. They got a beat, top and bottom, doing better than last year. I mean, obviously, right? Easy. Ooh, Google. Look at Google, man. Ooh. Yeah, smack Robinhood around. Die. So it looks like a lot of earnings are actually doing pretty good today, but things are moving down a little bit. Google Q3 earnings per share is $27.99 as opposed to $23.47. And sales is 65.12 billion as opposed to 63.45 billion. So that's a great beat on Google's side, top and bottom. 70% increase compared to last year's. Sales is 41% increase compared to last year's. Stock price was trading around 1,500. It's almost up 100% at 2,800. So it had a pretty good run. It's starting to get to the point where stock price, the earnings isn't justifying the stock price as much. Hey, what's up, guys? Fiat World. Simon, Sean, Chester, Hawaiian Beef. Damn, Hawaiian Beef. Why you hate Hawaiian Airlines so much? Let's see. Robinhood earnings per share is negative $2.06 as opposed to negative $1.36. Sales is 365 million as opposed to 431 million. Huge miss there. Missed it by 15%, and missed estimates in terms of earnings per share by 51%. Disgusting. Q4 is going to be weak as hell as well. 325 million as opposed to 500 million. I hope this company dies. I hope Robinhood stock goes to like $1. What's up, Mass Appeal? Wanger and Hash. Where we all hate them, right? Waiting for AMD to come out as well. We did play Twitter though, so let's check out Twitter. Let's see what's going on here. Looks like a huge miss over here, actually. A little bit surprised. So Q3 earnings per share is negative 54 cents. Miss estimate of positive 15 cents. Sales is 1.28 billion as opposed to estimate 1.28. So sales is in line. How did they miss so badly if they did good in sales? So sales is a 37% increase compared to last year's. Average daily active users reached 211 mil, up 13%. Robinhood says they see full year sales less than 1.8 billion. Ooh, that's ugly. Twitter says continue to expect total revenue to grow faster than expenses in 2021. We continue to expect total revenue to grow faster than expenses in 2021. Excluding the litigation settlements announced in Q3, we expect to continue our investment posture as we enter next year. A 30% headcount growth in 2021 with annual merit increase and other investments we made in 2021, including a new data center, will flow into annual expenses for 2022, resulting in a mid to 20% increase in total expense next year. Prior to hiring any more people or making additional investments. Okay. International monetizable daily active users 174 million, up from 152. That's pretty good. Next quarter's estimate is pretty iffy, a little bit range there. I mean, but for us, I think we'll be good because we benefit from the chop. We got the 58 calendars, right? So where's Twitter at? Twitter's at $60. We have the 58 calendar put as a hedge in case it didn't go the direction I want. So if we actually do end up, hanging out around this $58 range, this is where we make the most money. If we close around $58 on Friday, we're banking. If we close around $55 on Friday, we're banking as well. We're making anywhere from $142 to $180 per contract, and we got two of those contracts for dirt cheap, for $20 a piece. So those $20 contracts could potentially be worth 150 to like 200, as long as it stays between this 55 to sub 60 range, despite that bad earnings. That call side might be wrecked depending on how things go. We'll see. We'll make a decision by tomorrow on what to do with the call side of it. Let's look at some other earnings. Right. BMY. I think BMY is tomorrow morning if I remember correctly. AMD. I don't know if AMD came out yet. Did it? Or am I just missing it? I don't see it yet. Yeah, I do. Yeah, oh boy. Hopefully, we'll see. We'll see how things play out tomorrow, but we do benefit from that chop. I am actually somewhat bearish on the market overall, though, because I think it's time for a little bit of cool down, but I could be wrong. We'll see. Let's see. Let's look at some of the other earnings that's coming out. F5 Networks earnings per share is $3.01 as opposed to $2.75. Sales is 682 million as opposed to 671. 23% increase compared to last year, and 10% increase in sales compared to last year's. 1 year growth in terms of stock price was 132 to 200. About $70 move up. $70, about 50% move up for the company. So stock price moved up a little bit more than earnings so far. Earnings performance so far. We're still waiting on AMD. Haven't seen anything for AMD yet. Visa also reported as well. Let me see how they did. Visa's earnings per share is $1.62 as opposed to $1.54. Sales is 6.6 billion as opposed to 6.53. 44% increase compared to the same period last year, and 29% increase in revenue compared to last year. That's good, man. That's really good for Visa. Last year, company was trading on 193s to like 180s. On the 2-year basis, the high was around 213. So it's at 233 right now. Let's say taken from last year's 190 numbers times 1.29, puts it around 245. It could come back to the highs. That was a pretty good earning, depends on how the guidance goes. A lot of companies are not sure where the direction of their guidance is going to be lately. I'm not necessarily looking for a crash at the moment. I mean, there's always a possibility, but there's a few things going on, from tapering that's going to happen, next quarter or next month even, which is kind of bearish. And then there's also, just the market running so hot that it needs to breathe, and it hasn't really. Well, it took a little breath, but I don't think it really taking enough breath. So that's why I was slightly bearish, expecting it to take a bigger breather. So F5 sees a full year 22 sales growth around 8 to 9% year over year. If the company is trading around like 132 and they're seeing 8 to 9% growth year over year, that would put the stock price at really high. It would make the stock really overpriced in that sense. Capital One Finance also reported today as well. Looks like they have really good earnings. Earnings per share is 686 as opposed to 538. 35% increase compared to last year. The company was trading at 105 prior to COVID. Now it's trading at 165. So had a good increase, at least 60% is in, give or take. So it's a pretty good run in terms of compared to stock price already. Let me see. You guys are saying AMD is out. Let's check it out. The AMD blasted through. Are we on a moon mission here? AMD today announced revenue for third quarter of 2021 of $4.3 billion. Revenue increased 53% year over year. Gross margin grew more than 4 percentage points year over year to 48%. Definitely great earnings. Not as good as last quarter, obviously, because last quarter was 99%. So I did expect AMD to kind of beat, not gonna lie, because it's been solid, man. It's been taking a lot of market share, but it definitely didn't have as crazy of a beat as last quarter. It says EPS is 73 cents as opposed to 67 cents. Sales is 4.3 billion as opposed to 4.12. This is a 78% increase compared to the same period last year. And sales is a 53% increase compared to the same period last year. Last year, company was trading around, 74 to 81s. So 81, if we're just assuming it based on the price increase. let's see, that's 81 times 1.53. That's it on that price point right now, 123. If we're just calculating strictly on price times like revenue increase, it's pretty in line. I think it could be worth more than 123, but I think it's probably going to chop for sure. Q4 guidance is strong here though. AMD sees Q4 sales at 4.5 billion, give or take 100 mil, as opposed to 4.25. Gross margin 49.5. That's freaking nuts, man. That's nuts. Oh man, Kip. I mean, AMD is TSM's biggest customer, and you know the thing, like when they say like chip shortages, I dug a lot deeper into it. There's like different sizes and stuff, and apparently when they say chip shortages, it doesn't really apply to like computer chips and graphic card chips as much, because like they prioritize it more, since like AMD is like one of the biggest customer for TSM, and like AMD's chips are bigger chips, so they get more priority as opposed to like those shitty chips that they use for cars. So a lot of the car chips, right? Like every car takes about 15 to 30 chips to make, and those chips, even like 15 to 30 chips, those chips only cost like less than $100 because they're just so small and like useless chips that like, you know, TSM could sit there and be like, you know what? Do we make these small, useless chips for car companies that we barely make margins on, or do we make chips for AMD where we bank on? So you know, obviously they're gonna choose the latter. Hey man, if you guys knew me for a while, you know I'm a big AMD bear. But even after last quarter though, man, I changed my perspective because their growth was just phenomenal, man. It's tough to step in front of this chain. You know what I mean? I was bearish on AMD for quite a while. But once I read the report for last quarter and I dug like so much deeper into it, the amount of growth they have last quarter actually caught the company up so much. It's between the last quarter and the last few quarters, AMD's growth had caught the company up so much in terms of like catching up to the stock price. It's pretty wild, man. Like AMD used to be a company that was trading at hundreds in price to earnings. Now they're like trading at 40s. They're getting pretty close. I mean, they're still 4x more than Intel in terms of price to earnings, but they have gone like much closer now. Let me see. So that was a pretty good report from AMD, man. Not as good as last year though. I mean last quarter though, but it was pretty good nonetheless. Oh my god, dude. This is where it gets crazy. This is where AMD gets crazy, man. Jesus. Net income is up 137%. Because once you get to the point where you sell so much stuff, and you get past like break even, you start making so much more money, and that's what just happened here. That's true. Yeah, that's true. That was from last quarter. I was like, it's retarded, you know. I'm pretty bullish on TSM overall. I like the company. I think TSM is gonna be around for a long time, and they're like there's really nobody that's gonna touch AIM like that's gonna touch TSM like that. They're just like the best at what they do, man, and they just like have so much clear advantage. It's gonna take a long time for somebody to come in and like kick them off, and on top of that, they're just the market leader. Yeah, it's just, it was too far, man. So Lisa says, "Yo, how's Lisa been, man? I haven't seen pictures of Lisa in a while. How's she doing? Is she still a babe?" Oh man. Yeah, I remember when Wall Street Bets used to pump her all the time. Revenue was 4.3 billion, up 54%. So margins really good, 48%. Net income killed it, man. 923 million compared to 390. Damn, that's a sexy net income. Computing and graphics segment was up 2.4 billion, up 44%, and 7% quarter over quarter. They're continuing to gain like market share. What is this? Enterprise? Oh, I guess this is like data center. I'm guessing that's like data center. It looks like this is where the big growth is, 70% year over year almost. Google partnership helped them too, nonetheless. And then they're also launching the new Radeon RX 6600 XT to kind of compete against NVIDIA. So AMD's like, yo, we're done taking food off Intel's table. We're at a point where like we can only take so much food off them. Now it's time to go after NVIDIA. Let's go. So it's gonna get to the point where it's like no longer AMD versus Intel. It's gonna be AMD versus NVIDIA. And then people are gonna look at the price of NVIDIA, and then they're gonna look at the price of AMD, and they'll be like, yo, AMD's hella cheap. Let's get it. Yeah, I wouldn't be surprised if people really start comparing that one day. You heard it here first. Went to Google. Google is pretty good. The ER overall. She got jacked just like Basil did. Does she have a husband? Is Lisa like single? What's the situation there? I cracked the AMD now. Screw fanboys that compare them to Intel, to Apple to Orange. Maybe my own PC, load the processor. Swap to AMD this year for first time purpose. You know, man, honestly, I've been like, I gave AMD a shot quite a few times over the past few years, and I think like 3 out of 4 of those times, it has flopped for me. It had disappointed me. The last time was probably the only time it was pretty okay. But I mean, Intel's getting pretty cheap. Intel processors are extremely cheap now. NVIDIA is so expensive though. It is. The good old day when the video was pushing 1K a share pre-split. Oh man, right? I mean, but even NVIDIA isn't like all about graphic card now. NVIDIA is like all about AI, the metaverse, all that stuff. It's on a whole nother level, yo. Oh my gosh. This is disgusting. AMD raised their full-year revenue growth guidance from 60 to 65%. They said we're gonna continue to grow, man. Nothing's slowing us down. Alright, let's check out what other earnings we got going on. Oh, you guys said what's going on with Twitter is blasting out. Jeez, the hell? Freaking weird, man. Microsoft is still moving. Is moving up. Up $5, 2%. Let's check out this other company, CoStar Group. Earnings per share for CoStar Group was 25 cents as opposed to 23 cents. Sales is 499 million as opposed to 497. 17% increase in sales compared to last year. Where's the company trading at? 83 to 77, 75-ish pre-COVID. 75% 17% increase. It's around $87. Earnings per share for Q4 guidance is pretty in line. And sales is a little bit under, so a little bit bearish there. So that's why stock kind of dropped a little bit. I don't understand the attractiveness of Twitter stocks. I have no interest in that. Well, I mean, so Twitter is kind of at an interesting point, kind of like what Instagram just did. Because like, you know, I don't know if you remember back in the day when Facebook used to be just like a free platform, no advertisement or anything, and when you used to be able to like poke people and stuff. So Twitter is kind of at the point where they're about to revolutionize themselves, and they're about to start making money, and they're like, I think they're doing like this private user thing where like you can do subscriptions and stuff like that for Twitter. So like some of these people can make their tweets like on a premium basis, and they can charge people for whatever and stuff. And this is like another version of like Twitter trying to monetize it, as opposed to like them just trying to make money from like advertisements and stuff. Now they're you know, having more ways to monetize the platform. So I think that's pretty bullish. I think that could be pretty bullish for the company, and it could be a pretty good catalyst for the, you know, for the company moving forward and stuff, because they've never really like, you know, attempted to do that before, and they're still like constantly trying to break even in terms of like, you know, making profit and stuff. So I think that's what's pretty interesting for them. Like the opportunity for them to make more money is pretty wild there. That's true. That could happen. Hopefully, we would benefit from that. Six Flags earnings tomorrow. Let me see. How is Six Flags trading right now? So Six Flags is trading close to pre-COVID levels at $46, $47. It's had a really good run. I know for sure that Six Flags was definitely packed as hell this summer, like super packed, bro. So I know for sure like tickets were selling out and everything, and you know, they were generating revenue and making money for the summer. I don't know if they will have more sales than they did the year before, but I know they were definitely making money. With that said, I think they also lost a lot of money in 2020 with the shutdown and the whole, you know, the COVID situation and stuff, and and they probably had to make a lot of improvements to sanitize their park better. They probably had to increase their costs, just like on the whole cleanup and all that situation. So I think their margin are definitely going to be much different than it was prior to COVID. And I think at the current price point of 46, whereas at the pre-COVID level, I think it's a little bit slightly overvalued, based on considering the fact that they had lost a lot of money, last year. So I would say I would say I'd be bearish on it. I don't think they're gonna run past it, but sometimes it could do whatever it wants. And we can even use and I would also say we can use Disney as a comparison, right? To a certain extent, Disney's been having a few ERs and it's been flopping a little bit. However, with Disney, they do have that Disney Plus subscription that's been boosting the stock price up. But if Disney didn't have that Disney Plus subscription, it'd probably be valued under sub 140s or sub 150s easy. So, and obviously Six Flags don't have that. They don't have that streaming segment that can bring them up. So I think they're a little bit bearish in that sense. But we'll find out. We'll find out tomorrow. How are the PlayStation 5 selling? About 40% AMD revenue last year was from PlayStation and Xbox partnership. I'm not sure. Are PlayStation still sold out? Is that still really hard to get and stuff going into Christmas? So I'm a CPU cooler fan. Oh, let me check this out. What's going on here? T-Doc. I was inspired by this legendary post where a user predicted Amazon affirmed partnership. What? Prior to earnings? Okay, some good news there. So I wrote a scrapper to hit URLs like Amazon/affirm for 1,000 companies in the NASDAQ. Over the last few weeks, I noticed a handful of pages newly popping up on T-Doc's website. So we have T-Doc/Google, T-Doc, Teledoc/ wait. Is it Teledoc or Teledoc? It is Teledoc, huh? You can see that none of these pages exist before on Wayback Machines. I'm not sure what it means, but it looks like they are actively growing their expert medical opinion service, but nothing has been written about online yet. Next, I made this post on Blind, an enormous forum for employees at different companies to ask questions. Look like none of the companies offer teledocs to their employees yet, though Google offers live health. Do Google, Apple, Microsoft offer telemedicine as a benefit? So I imagine the partnerships are still on the way. They're reporting on October 27. I could see these partnerships being announced either around then or in the following weeks, and if that's what's going on. In the meantime, I bought T-Doc 155 calls for January 21st. Oh, dude, this is crazy. This is crazy. Will this happen? Is this the truth? Do you realize your DD inspired man to YOLO his 5.7 million account into T-Doc as well? Oh, no way. That's nuts. Alright, let me see. That's interesting. I always like that, man. I always like it when you guys bring interesting information like that. Let me see. Let me look at the flows, man. What just happened here? They didn't want me to see the T-Doc flow, yo. Did you guys see that? So I'm seeing some 125 sweeps. This is a sell order here, though. And I'm seeing another sweep at the 140s. And T-Doc's trading at 140 right now. So if somebody's sweeping 140, that's pretty in the money, man. God damn. This is also a pretty bullish sweep in that sense that they're also selling in the money puts. So they're selling 250 puts, and you almost never sell you never short a put like that. So let me show you. So they're not long the put, they're shorted. What was that? 250 2023. So 250 2023. Like, so if they're shorting the 250 2023, right? That means they're expecting it to move back above that price. So it's a pretty interesting move. So like, it's an odd move where people won't see what's going on, or people won't understand what's going on. But essentially that move needs the stock to remain above like $136. And any move above $136, they're gonna make money. And it's a pretty long dated move as well. It's to January 2023. So it's a pretty interesting move there. A lot of people is not gonna be able to read the action, but that's overall bullish. So let me see. It looks like there's slightly more bullish positions than bearish positions. It's interesting. Let me look at the chart. I mean, it's definitely pretty cheap considering that it's below the March 2020 levels. I'm pretty bullish on the whole sector as well. I think that Teladoc is definitely going to be like the future, and I don't see it declining anytime soon. Obviously, it's still very new and it's gonna take a while for them to make money, but I do believe that it's like the future of like medicine, and it's only gonna grow further and further. But if they do get a partnership between the top 3 companies, that would be big, man. That's pretty bullish. But their options are so expensive though, that's kind of hard to play. I might have to sit there and figure it out a little bit more. I have to think about it, because ideally I would want to play a spread on it, like a debit vertical spread, but then at the same time, that's gonna cap our move as well. So, I mean, you can essentially go with the naked call too, but you're gonna get premium burn on that also. So it's a little bit tricky. You have to think about it further and figure it out. Why is Google tanking after a pretty good beat? Let me see. They had a good revenue, 41% and 39% year over year. Margins increased 32% year over year. EPS had a pretty good move as well. I think we just looked at it earlier too, and we were saying, oh, they also repurchased a lot of shares too. I think it's just because the stock price, like we talked about a little bit earlier, Buzzer, about how like their stock price had increased so much because the stock was trading around 1500 last year, and right now is at 2800 almost, right? Or prior to ER was like 2900. Like what's 1500 times 2? That's 100%, right? So it essentially almost ran up 100% for the year. But as you can see, like the company's doing good, but it's not doing good like 100% back-to-back increase year over year. So like you can see some of this revenue increase year over year for the quarter is only at 41%, 39% respectively in terms of constant currency, and margins 32%. So price doesn't really necessarily justify how far the earning has. Like the earning hasn't justified how far the price has gone. But yeah, pretty much. And that's why like I always compare it back to how they were like a year ago or 2 years ago to the all-time high, because every once in a while you see like things that make sense, and then like but most of the time you see things that don't make sense. So that's why sometimes even if they had a great earning beat, but if they already ran so hard prior to the earnings, then that means everybody and their mother already knew it was gonna happen. So that when it did happen, they end up selling it, as it's happening. So end up selling the news because the stock price has already, adjusted or overran past that earnings. That's why earnings are so tricky sometimes. But then again, sometimes they could have really good forecasts, and they could have like, they could be like, hey, yeah, we may only 40% increase this year, or this quarter, but next quarter we got like something special coming on, and this could be a deal breaker. This could, balloon us. So, and things like that could essentially make it pump too. But we haven't really seen that from Google here. But it's so hard to trade Google anyways. I don't think I have traded Google since like 2017, because the premium was already so high in the sub thousands range. Now is at like almost 3,000. EMPH also reported today earnings per share 60 cents as opposed to 48 cents. Sales is 351 million as opposed to 343. 96% increase compared to the same period last year. Where's the stock trading at last year? Like $100. So right now it's at 173. So just ran after hours and kind of just filled that 90% increase right there. I don't think I could find a greater example than that. Like, if you take $100 times 96% increase compared to sales, you get pretty close to like 190 something. So sometimes they justify themselves like that when the growth is more than the price of the stock too. They probably have an algo that does that too, man. All right, let's go on the list here. Do you guys have any stocks that you guys want us to chart out or check it out or anything like that? Let me know. I'm gonna post the T-Doc chart here. So I'm gonna look a little bit more into it. Sure. So let me see. T-Doc is hitting one of the SMA resistance here. You can break above 145. Next level is 151. Give me a second. Let me identify some levels for T-Docs, and then I'm gonna look at Winnebago real quick. I know it did drop today. Me and Guru were talking about it a little bit. 152 to 175. And I did end up buying the dip on it because I'm still pretty bullish on the company, still like it long term. So ideally though, if you really want a good level to buy the dip, it would be, this is one of the levels here at 65, 64, 65ish, right? We kind of blew a little bit off below it, and then we came back. The next level that you would want to look for to buy the dip would be around 61.74. So that's also a pretty good level. I think if it comes back to that level, I'll average down again. So I did take an average down today when it came here because I got an alert for it, and overall pretty bullish on the company. Every once in a while it gives discounts, and it drops below like the valuation. And it'll usually come back once that happens. But if you bought shares, that's even better. I picked up another call spread from 65 to like 70s for December. So I think it was like around $150, $160 per contract. And I'm expecting them to like kind of bounce from here to 70 plus. If they do that by December, I'm pretty good. So we got some support at 65 and support at 61. WGO. Support at 65 and 61. So just a refresher, we'll go through that earnings real quick from a while back. We talked about the earnings last time. It reported on October 20th. Today is October 26th, so that was like a week ago. Earnings per share was $257 as opposed to $201. Sales was $1.04 billion as opposed to $958 million. That was pretty good. Back, up and bottom, top and bottom. Earnings per share was 77% increase, whereas sales was about 40% increase compared to last year's. And last year the stock was trading at, let me pull up. So last year the stock was trading around $50. So let's say $50 times 40% increase, that's around like $20, right? So add 20 to 50, you're gonna get like around 70. So that's why I did 65 to 70. I think it should be worth anywhere from like 70 to 80 plus easily. And then even especially if you look at them from pre-COVID levels, this could also be looked at as one of the supports right here, the $63 range as well. And that was at February 16 of 2020, and at that time it was trading around $60 something, and then the stock crashed a lot with the whole market. But for them, they actually didn't lose money at all during COVID because people actually bought more RVs than ever. There was already a migration to this RV life coming back into style again within the last year and this year, and the trend seems to only be increasing. The people that couldn't afford these Winnebago RVs end up buying some of the Ford vans and stuff. But just like that, those two couples that with that girl that went missing, I think Brian and Gabby, right? So I think the trend is still gonna continue, and I think they're gonna continue to make money and have great quarters. The only thing that's affecting them a little bit is supply chain issues and chip and material issues. But other than that, I think they're okay. Yep. But yeah, I mean, if you're adding it long term, I think you're okay. I need to get in the RV life. I feel you, man. My boy Kip here, he just got he got an Airstream. He's living the life right now, yo. One man. Google double profit for the quarter but sells off. Why not Hawaiian beef? Why not? Oh, QuantumScape reported as well. Let's see. Oof. Earnings per share is 13 cents, negative 13 cents as opposed to negative 10 cents estimate. As this compared to last year, it's doing really good. Compared to last year's 91% increase. But, obviously stock price is like big increase as well. Originally, stock price was valued at $10. Right now it's at $25. So stock price is seeing like a, 150 to 250% increase. Let me pull up the earnings though. Oh my god, man, they're sending me in a loop. Trash. Screw that company. Set me in a loop, yo. Oh snap, you too, man? You too? Man, next thing you know, I'm gonna look into an Airstream. Gonna be Airstream buddies. We'll be like Trucker, but Airstream buddies. But yeah, that's pretty much it. Let me see. Do we have any interesting earnings from this morning? I think we did. I forgot. I remember there was an interesting one. JetBlue had an interesting one. It was pretty good. Hasbro had an earnings from this morning as well. Waste Management too. Where's Hasbro, man? What's an Airstream? It's like streaming in the air, yo. Third quarter revenue up, entertainment segment revenue up a lot. Not as much growth as I'd like to see, but doing pretty good there. Pay off a lot of debt, a lot of cash. on hand. Cash flow is good. Net earning up 15%. Looks like the growth is slowing down a little bit. They used to have crazy growth, but looks like the growth is starting to slow down. But yo, at least they're still growing, and I think at 91. I mean, based on the fact that they're still growing, I think they can come back to pre-COVID levels at like 106. We'll see. For some of you guys that aren't sure what Airstreams are, I wasn't sure either. But it's an American brand of caravan, easily recognized by its distinctive shapes of its rounded and polished aluminum coachwork. Reminds me of like old school diners, man. I don't know why, it's just this silver thing. It's pretty cool. I mean, you know, especially if you like, look at all the positions that's possible on this, you know, on this couch sofa thing. I mean, look at the bathroom. I mean, look at the kitchen. Would you look at that? Look at that. It's pretty cool. Yeah, it was like back in the 60s. Pretty wild there. What was it HIBB? Hip Sports? Yo, I'm kind of scared, man. This company had a huge move already. Had non-stop growth, like kind of like Sportsman Warehouse, I think. So it's kind of like the market right now, where we had that huge parabolic growth, broke under, you know, the moving average. Now it's trying to come back and hitting a little resistance there. I said I'll get a little bit scary trying to hold this position. Maybe you buy the dip around 68, but as of right now, it looks kind of iffy. Well, that's pretty much it, guys. I'm gonna end the stream here. Thanks for stopping by, and we'll be back tomorrow. And I'll post an update on the plays later on as well. Probably tomorrow morning. I'll post the plays on what we're gonna do with Twitter tomorrow morning once we see a better direction. Once we see like what the analysts are gonna say. So sometimes, you know, if Wall Street want to move it up, they'll start pumping a lot of price upgrades and stuff. If they don't want to move it up, they won't do anything, and we'll get to enjoy the chop. And if it does chop, indeed, it'll be good for us. But yeah, have a good night, guys, and take care.